Good evening, all. This is Shay Horror with ShogunTrading.com. Today is Monday, Memorial Day weekend. Hope you took advantage of the weekend. Hope you remember what the weekend is all about. Thank you for all the veterans. Let's see. The market is making me a little worried right now. I've been bullish for a little while. I really thought that the market had nice momentum to the upside. We've been in an uptrend. This is S&P 500, by the way. We've been in a nice uptrend for a while. And then last few days we took a dive, and that's not, to me, that's not a good thing on a long-term basis as far as the long side is concerned. It could be great on the short side. Notice that the red line, that's a 200-day moving average. We bumped against it, and now we are bumping against the blue line, which is the 50-day moving average. It is normal for the market to bounce off the 50-day moving average, and I can show you quite a few examples of these kind of bounces that the market makes off this line. That's pretty well known. So we could see a bounce at this point, and you can see it right here as well. We're still in kind of a channel up. It's a much looser channel, and I'm not really liking it. There are quite a few factors out there that, of course, are affecting the market. One of them is gas prices. Gas prices are absolutely ridiculous. $4, $5 if you have a boat. I just saw on TV, for example, that if you live in the UK, in France, or in Netherlands, your gas prices are almost $9 per gallon. $9 per gallon. So if you think $4 is bad, think $9 per gallon for some people around the world. So, of course, it's affecting the market. Of course, it's driving everything up, prices of everything up. Financials are still not doing too well. Financials are still taking a beating. We've been shorting the financials and having a ball shorting them. And I think they have more room to go on the downside. I also think that commodities are a bubble right now. And, I think a lot of it is speculation. I think a lot of it could be deflated quite quickly when we need to. Of course, it depends on what we're going to do with this oil problem. If we're going to drill for more oil, or if we're going to nationalize the oil industry, like some people are suggesting, which I think is quite funny. Let me see. So that's S&P 500. Dow Jones Industrial Average actually looks even worse. You can really see the double top over here. And that really looks like a change of direction, change of trend to the downside. This one is not really keeping any kind of a trend line. It really does look like it's diving pretty well. But, Dow Jones Industrial Average is only 30 stocks, basically, so it's not that big of a deal. NDX, which is much wider, 100 of the top stocks in NASDAQ, had a very nice uptrend and now is pulling back just a little bit. I'm ready for the short side, and I'm ready for the short side in specific industries. I'm specifically financials and agriculturals, and possibly oil fairly soon. We'll see what happens. We'll see what kind of a top we are going to form. But right now, we're really having a ball with the short side on the financials. Let me give you an example. CRBC is a bank, and we shorted 803, reached 572 on Friday. And it's still going down. It's going down every day. Beautiful trade. 2 points on an $8 stock. The other one that we're shorting and we're doing pretty good on is LEH, Lehman Brothers. And that one is doing pretty well as well. 41.37 was our entry point. It went all the way down to 35.20. So we're able to take advantage of all these financial stocks as they go down. Another one that is really affected by oil prices, of course, is the airlines. And we called UAL. And UAL, we shorted at the 1340 and went all the way down to 736 in about 5 days. It took a little bit of a break, but eventually penetrated and went down for five days. And that's quite substantial. From 1340 down to 736, quite substantial. Because, of course, it's affected by it quite a bit. There's another stock that's really affected by oil prices, and I gave it to you, I think, a couple weeks back. And that's RCL, Royal Caribbean Cruises. And Royal Caribbean broke the 30, went all the way down to 26.88. And, of course, they're affected by oil prices because they do have to use fuel for those incredible cruises that they operate. We also gave you one on the long side, GNA, which had some problems at the beginning, but then penetrated again and did very well. Went all the way up to the 1834 from 1654. Not too bad. I still think both of these have much room to go. Of course, the long side is going to be very tough right now because of the market itself turning down, but it could still work. You can see that this is the weekly chart. If you refer back 2 weeks, you will see that that's the chart that I drew for you. RCL is also a chart that I drew for you, and you can see that we broke the support level, and we have quite a bit of potential to go. It can go down to 15. You know, that there's no reason why not. So, you know, of course, these are all very, very interesting on a long-term basis. An oil play. I do have one trade for you for this week, and this is the Chicago Mercantile Exchange, CME, or actually it used to be CME, Chicago Mercantile Exchange, not the CME Group. But anyway, this is a wedge that it's forming right on top of support, right on top of the 450, 451. You can see that all the moving averages are pointing down, but more than the daily chart, I'm interested in the weekly chart. And the weekly chart, you can see that this is a stock that's been up from 100 all the way up to 700, from 700 pulled all the way back down, and it's sitting right on top of support at this point. And you can see that a very, very definite support. If it only goes down to the 200-day moving average, which is the red line, that'll be only a 50-point move on a $450 stock. Not too bad. If it keeps going, it could keep going quite a bit. And I think that's something that's going to burst. I have a feeling that, you know, we're going to start controlling the way speculators speculate, and the more controlled, the less volume, and of course, it's not going to look good. So that's what I'm looking at over here. Let me see. The stock is a very expensive stock, you know, so I don't necessarily suggest that you short the stock straight. I suggest that you actually buy the puts on it. And the reason why is because the puts are only going for $20, $30, and the stock itself is $450. So you can take your a much less risk for a lot more power, a lot more leverage if you're doing the options themselves. If you don't understand options, please let us know, and we'll give you a crash course in options, and we'll get you up to speed on those. That's about all I have for this week. You know, it's a short week. It's a holiday week. A lot of people are in shock. A lot of people are bridging. A lot of people are taking extra days off. I do expect very low volume this week. I expect quite a bit of decisions. I'm sorry, not decisions, but talk about oil prices and about commodity prices this week. So it could be interesting on that front. Anyway, have a great week, and I will talk to you next weekend. For those of you that are subscribed to our daily service, I'll talk to you tomorrow. Take care.